Hello, good evening. Hi, everybody. Welcome to our stock seminar. So, if you're in the room, can you please say hi to me, whether you're using Facebook Live or whether you're in YouTube Live? So, if you want to know more about the stock market, do stay tuned. Today, I'm going to share with you 2022, the new year. Okay, the new year, how is the stock market like? Okay, so if you want to know the forecast and a bit of discussions, so can you please say hi to me? Let me know you're in the room. Okay. Where are the comments? Okay, let me see. Okay. Hi, Max. Okay, I saw you. PL Lee, KT Xia, Happiness Path, Chris Chua, Lim Chi Yong. Okay, Vincent Chan. Okay, welcome to our stock seminar. I guess there are so many things here I want to share with you, especially okay if some of you you have been keeping track of the stock market, you have been playing US shares, you might know some shares has really tumbled, okay, especially the so-called tech stocks, okay, because there's a bit of fear in the stock market. People are fearing about Federal Reserve, people are fearing about interest rate hike, people are fearing about tapering, okay. So let me see who are in the room. Kin Leong, hi. Liu Chin Chun, okay. Stephanie, hello, okay. Edwin Fu, UBC, okay. Hello. How are you? Then, of course, if you are using YouTube Live, okay, you can also see me, Alex Low, uh, Wally Ang, okay. Good evening, okay. Hi, Edward. Hi, you. Okay. So if you're in the room, please say hi to me so that I know you're here. Okay. So it has already been almost, I think my last live video, okay, interaction is somewhere around November. Okay, October, November. Then following which I have a 1 month holiday in December. Okay. So I haven't so-called have any interaction with you all. A lot of people ask me, Daniel, when is your next Facebook Live? Okay, because in December a lot of stocks actually drop. Okay, of course some of you do have stocks that keep on climbing to all-time high. Uh, you may have like Apple, okay, Microsoft still at a high point. But there are a lot of stocks that already tumbled. Okay, China tech stocks, okay, high yield stocks, okay, Cathy Wood stocks, ARKK stocks, okay, already tumbled. Okay, some have already fallen almost 50% in the last 6 months. Okay, some already tumbled 75. Okay, some already dropped 80% from the peak. So is it a chance to buy? Okay, how is the first half of this year going to be like? And what about, okay, is there a market crash? I heard there are a lot of predictions, a lot of forecasts, a lot of rumors going forward into 2022. Some said that there might be a crash somewhere around February or March. Will there be one? Okay, so let's have some discussions. Okay, today. Hi, Iki. Hi, Daphne. Hi, Chin Kin Kok. Okay. Hi, Karin. Hi, Vincent. Okay. Welcome. By the way, today we are both using uh, Facebook as well as YouTube. Okay, for this for this live session. So if you have any questions, do drop in the comment box. Okay, so there is a comment box there. If you have any questions for me, drop in the comments box. So if I manage to see your questions and I really know the answer, I'll try my very best to help you. Okay, I guess there are a lot of doubts today. Okay, so how is 2022 like? Okay, maybe let's have a recap. What actually happened in 2021? Okay, what actually happened in 2021? For me, let me just summarize 2021, okay, with one word: strange. Okay, 2021 to me is a very strange year. I've never seen, I have been a full-time trader over the last 15 years in the stock market, okay? But I've never seen a year whereby there can be so much diversity. I'm talking about a single sector, and I'm talking about tech sector. It can be so diverse. There are some stocks that keep on climbing new high, but there are some stocks that actually falls almost 70%. Oh, so never have I seen such a thing happening. Okay, such a diverse stock market in the same sector. Okay, so why is it so? Okay, I guess it's because some people are worried, some fund managers are worried that stocks already reached a high point. So there is a bit of what we call money flow. Okay, so some of the risky assets, okay, the funds in the risky assets flow into the safe asset class. Okay, and when I mean by safe asset class, it can be a same sector, but okay, it's safer than some of the risky assets. Okay, later we shall take a look. Okay, let me show you what happened in 2021. Okay, of course, it's always good to look at the whole market. Okay, and one of the representation of the market is of course our three major indices, right? So in US there are three: S&P 500 index, Nasdaq 100, and Dow Jones 30. Okay, so let us take a look at S&P 500. Okay, so this is a chart of S&P 500 over the last 1 year. From 2021, it was still lying at 3,006. It reached an all-time high of 4,008 before last week correction. So on Friday, it did drop. Okay, last week it did drop. Okay, somewhere around 200 points, right? So there is a strong rebound yesterday. Okay, in the mid so-called in the mid-noon session, there's a strong rebound. Okay, and today is lying around 4,674. Okay, I would say there is not much drop in the S&P 500 index the whole year round. Okay, the whole year round. There is a bit of drop, maybe in February. Okay, February period, almost like a 1 month, half a month drop, and a bit of drop in September. Okay, so from almost a high peak of 4,540, it dropped to almost 4,250 points, a drop of somewhere around 300 points, which is less than even 10% correction. Okay, then following which it keep on climbing to a new high again. Okay, so this is the index. Okay, S&P 500 index. Same with Nasdaq 100. Okay, this is Nasdaq 100. Okay, so if you can see Nasdaq 100, okay, last year at the beginning of the year, it was still lying at 12,400 points, and at the end of the year in December, it climbed up to almost an all-time high figure of 16,700 points, right? So there's a bit of drop the last 1 month. It has already dropped almost like 1,005. Okay, but to me, a 1,500 point is not even a 10% correction. Okay, so looking at the index, you won't feel there is a big correction the whole year round. Okay, but guess what? If you look at some individual counters, okay, example, if you look at Zoom, okay, Nasdaq 100 consists of tech stocks, but it doesn't tell you the whole picture. Zoom, from a high price of almost a 450 point, today it dropped to $170. And this is a very, what we call a popular stocks, okay, amongst technical, among tech players, okay. And in fact, Cathy Wood, again, one of the so-called leading so-called ETF, okay, actually invests a lot in Zoom. Okay, so this stock has dropped from almost $450 to $170. In fact, the all-time high figure of Zoom was 588. This stock has dropped almost 70% from peak. 70%. While the Nasdaq is still at near to a high figure, all-time high figure, this stock has dropped 70%. Okay, so likewise, okay, a lot of stocks, okay, like for example, okay, Xylo, okay, also a kind of like property tech stocks, okay, fintech stocks. $200, it has dropped to almost $56, a drop of 75% from the peak. Okay, and why is it? If some of you know Cathy Wood, okay, this so-called guru that came out with something called the high yield growth tech ETF, right? This index has dropped from almost $160 to $80. Okay, $80 yesterday. So it has dropped half price. Okay, so this index actually invests in a lot of high growth so-called tech stocks. Okay, like Coinbase, Unity, Roblox. Okay, uh, Palantir. Okay, so all these are called high yield growth. Okay, why is it such high yield growth index actually drop? Okay, and by the way, when the ETF dropped 50%, a lot of stocks in the ETF actually drop more than that. That is why the ETF can drop 50%. All right. So why is it so? Such a diverse or so-called such a strange phenomenon. I've never seen this thing before. So normally in a big crash, okay, whether is it Apple, Nvidia, Netflix, okay, all together they will drop together, right? Along with the mid cap, along with the penny stocks, okay. But it's a very strange 2021, okay. And by the way, if you are just in the room, okay, I would really advise you, if possible, help us to market this video out, okay, by sharing with your loved ones. Try to share with as many friends as possible, okay, because it's very important for you to keep track of what may be happening in the next 6 months, okay. So let me share with you my opinion in June. Okay, what did I say about 2021 second half of the year? Okay, I always like to do a recap, okay. So let me show you some of my forecasts and predictions 6 months ago. Okay. So today what I did is I actually opened up my PowerPoint. Okay, my PowerPoint in the past. Actually, you can find my PowerPoint in my Facebook page. Okay, Daniel Low Investment Group. So if you are new to us, do try to add us. Okay, do try to add us. Just go to Facebook and type in Daniel Low Investment page and like us. Okay. So if you like us, okay, make sure you don't like the wrong one. Okay, nowadays there are a lot of fraud. So some are actually not the pages that I manage. Okay, so make sure you like the correct one. Okay, so just go to Daniel Low. Okay, investment group. Okay, so you should be able to see a Daniel Low page with 26,800 followers, right? So you just need to click open it and try to like us. Okay, so you can find all my live videos in the past. Okay, so today I just want to show you what did I say last year, okay, in the second half of the year in June. Okay, so let me open up a PowerPoint. Okay, so this was the exact PowerPoint that I have. Okay, every time I have Facebook video, I like to do some PowerPoint to share with you some stats, okay, some of my predictions, some of my forecasts, okay, so you can find it in my Facebook page, okay. So I just want to share with you, last year June I did mention that Wall Street is fearing about two things, okay, okay, I call it the two most critical market fears, and until today we are still fearing about these two things, okay. Number one is the rise of interest rate. And number two is the slowing down of printing of money. And the slowing down of printing of money, we call it tapering effect, right? So that means every month it will continue to print less and less money, okay? So these are the two factors that in fact I think has caused some of the tech stocks to crash. A stock like Zoom can drop 70%. It's almost like a crash in a bull market. Seldom do you see such a crash. Okay, 70% drop in a bull market. We're still talking about bull market cycle. We're still talking about economic recovery. We're still talking about maybe a 5 years to 10 years bull market, and yet tech stocks can drop 70% from peak. It's almost unheard of. It's very strange here. Okay, I think it's because of these two fears. Okay, and ever since June, I advocate people who buy shares, you need to be a bit careful. Okay, so in some sense I'm right. Okay, I did say this. The interest rate rise is because of this thing called inflation. Okay, and as you know, the last few months everybody is talking about inflation because inflation has reached a 30 years high. Later I will share with you the inflation figure. Okay, but this was what I said last year June. Okay, I said that inflation in the second half year will be worse than expectation. So I did say don't trust the Fed. The Federal Reserve, they think that interest rate will rise in 2023. They are wrong. They are wrong. Okay. Last month, Federal Reserve said interest rate will not rise at 2023. We will rise this year. Anybody who keep track of news, can you tell me what is the newest prediction? What's the newest forecast? How many interest rate rise will it be this year 2022? Can you write in the drop box? Okay. If you keep track of some financial news, can you tell me what is the new forecast today? Okay, interest rate will rise by how many times this year? Okay, let me see some of the comments. Okay, so if you keep track of some financial news, okay, how many times will interest rate rise? Can you please tell me? Write in the drop box. Okay, write in the comment box so that I can see you. Okay. Okay, I think my Facebook is not working. Okay, suddenly it was stuck. Okay, I can see some of your comments actually. Is it moving? Thank you. Okay, I saw it. I saw it. Okay, in my handphone. Sonny said 4. Brett said 4. Jeff said 4 times. Kenny said 4. Kwan Waikin said 4. Okay, you are right. Last month they said 3. Okay, last month they did say 3. Okay, the last Federal Reserve meeting, Jerome Powell. Okay, Jerome Powell, who is the now the Fed chairman, said 3 times, right? But the latest news, yesterday it was mentioned as 4, okay? I don't know why, I can only see a few comments here. Okay, but let me show you the article, okay? So this was the newest article yesterday that was published by Goldman Sachs, and it appeared in a lot of financial portals, okay? In fact, Goldman Sachs, one of the leading banks in America, predicts that Federal Reserve will hike rates 4 times this year, more than previously expected. So what happened last June was that Federal Reserve themselves, they said, okay, in fact, the Fed chairman, even in August, they said, most likely interest rate will rise only in 2023. And that was last year, August. Okay, they said it will rise in 2023. That means the whole year 2022, it will be none. Okay, there won't be any interest rate hike. Okay, then they changed the stand. They changed the stand in November, December. In November, they said they will rise, but we don't know how many times. In December, they said by 3 times. And now the latest news by Goldman Sachs is it will rise by 4 times. And let me tell you, I think you can trust Goldman Sachs. Why? Because Goldman Sachs is the spokesman for Federal Reserve. Goldman Sachs, Bank of America, Citigroup, whenever they issue a forecast, you must listen to these leading banks. Okay, because they represent the Federal Reserve. Their bankers is inside the Federal Reserve. Okay, they are the decider of interest rate. They need to prepare the whole world for a fast interest rate rise. All right. So before Federal Reserve say anything, you will most likely hear some rumors from either Goldman Sachs or Bank of America, and that was what I did. That was what I did. Okay. So in August last year, I did say interest rate will not rise in 2023. It most likely will rise in 2022. And I said the latest will be 2022, mid of 2022. Okay. And during last year, in June, I did say why interest rate need to rise faster to fight against this thing called inflation. Okay, if some of you keep track of our videos 6 months ago, I did say there are 2 ways of measuring inflation. The first way is called the CPI index. The CPI, the Consumer Price Index. The second way is the Producer Price Index. Some of you know, okay? By the way, if some of you have been following us for many, many months, okay, ever since last year, can you give me a thumbs up, okay? Just give me a good sign. Just give me a good sign, okay? So that I know you're our old friends, okay? If you listen to me, last year, I did say these two things. And the first half of last year, I did say consumer price index rise drastically, but not producer price index yet. I said keep track of producer price index for the second half of the year. I said producer price index will rise faster than what people think, because this is a seasonal pattern. Can you please write down in the drop box? Thank you for your thumbs up, okay? This is a seasonal pattern. It happens almost every year. Please write down this word called seasonal pattern. Inflation is a seasonal thing. It happens every year. It's the same thing over and over and over, okay? So please write down the word seasonal pattern, okay? Try to learn something, okay? So we help out each other. Producer price index measures raw material price. That means they measures meat. They measure how much is the pork. They measure how much is the beef today. They measure how much is your LV bag. So basically, the government has a way of measuring raw materials, of measuring consumer products every month. Every month, they keep track of these two things, okay? So producer price index, basically, it means they will go to companies that produce goods, okay, and keep track of the raw material price that they buy. So for example, if I am a plastic making company, right? I make plastic, okay? So the government will send people, or maybe they do their due diligence, okay, or liars with what we call the suddenly I forgot what, okay. Okay, like liars with the people who order the raw materials, okay. Suddenly I forgot the job, okay. But they will call up, okay, the person who ordered the raw materials in that particular company, okay, and most likely it will be a S&P 500 company, and ask them, okay, how much, okay, so how much price do you buy for your raw materials? So if you're in plastic, maybe you order some crude oil products, okay, so how much price do you buy? So you must do reporting, okay, it's a must for you to do reporting to the government if you are a big company, right? So they will keep track of a basket of goods, and they will come out with this price, the producer price index every month, right? Yeah, the purchasing manager. Okay, that's the job. Okay, the purchasing, they'll call the purchasing manager, and the purchasing manager, their job is supposedly to give the data to the government. Okay, so they keep track of all these prices, whether is it consumer products or whether is it the raw material products. Okay, and I did say last year in June that the PPI index did not, okay, go through the roof. Okay, but second half it will. Why? Because of festival. Okay, the word is called festival. Okay, so the seasonal effect of inflation has got to do with festivals. Okay, whereby people go and buy things. Okay, they have money, they go and buy things. Okay, so that's the reason why that the inflation rate went through the roof. Okay, it went through the roof. It went to the 30 years high in December. Okay, because of producer price index. They absolutely cannot control the price of beef today. They cannot control the price of turkey. It went through the roof. You can't even buy a turkey meat. Okay, so that was what happened during the Christmas season. Okay, and this effect actually kicked in almost in August. So you need to understand, people buy the raw materials, they want to manufacture before Christmas, so they need to get everything ready. That means they need to buy the goods 3 to 6 months ahead, okay, so that they can sell their goods in Thanksgiving, in Christmas, okay. And that's what lead to the hyperinflation. Okay. Okay. So at that time, in June, CPI was at a 11 years high, but I was forecasting second half of the year the PPI will follow through. okay, together with the CPI, it will lead to a sharp rise in inflation rate. Okay, so let's take a look at the inflation rate in US today, because it has got to do with, later I'm going to tell you my forecast. Okay, so if you go to Google search engine, you just need to type in this word called inflation rate. Okay, in US, it will have a lot of websites, but one of the website I always go to is called the tradingeconomics.com, whereby they actually do a summary of a lot of economic data. So I like to go to this website. Maybe you would like to bookmark it. Okay, tradingeconomics.com. Okay, so let's take a look. Okay, what happened? Okay, for the first half of last year, for the first quarter of last year in 2021, inflation rate is still kept below 3%. 1.4, 1.7, 2.6. Okay, then after April, it starts to skyrocket above 3%. Okay, now, can you please write down this? Inflation at 2 to 3% is considered healthy level by Federal Reserve. Okay, so roughly you know what is the guideline, right? How do you study inflation rate? Okay, 2 to 3% is considered a healthy inflation figure. Okay, so can you please write down the word healthy? Okay, equal 2 to 3. Okay, so try to remember. Okay, because this first half of the year, this thing is very important. Okay, 2 to 3% is considered healthy level. Below, okay, if inflation rate is below 1.5%, okay, it's considered very unhealthy. Okay, very unhealthy, as in there isn't much economic growth. Okay, there isn't much economic growth. Anything below 1.5%, most likely Federal Reserve will try to stimulate the economy. Okay, and that has been so over the last 10 years. Okay, before COVID, okay, they keep on printing and printing and printing money because it was lying at around 1.5 or less. Okay, now 2.3 is considered healthy, but what happened is after April it shot above 4. And let me tell you something, above 4.4% is considered unhealthy too. Okay, that's the thing about inflation. Okay, below 1.5 is considered unhealthy. Okay, because there isn't much economic growth. Above 4% is also considered unhealthy because it will lead to hyperinflation. That means you are in hyperinflation phase. Okay, and people will complain. Okay, they are so worried that, okay, people will walk on the street to complain the prices of your rent, prices of properties, prices of meat, prices of petrol, prices of this, prices of that. Okay, and it will lead to uncertainty in the market. Okay, and politicians are very worried about this, because you got to understand, this year is the year of midterm election. Later I'll come to that. Okay, second half of the year is about midterm election. Okay, so most likely Joe Biden don't want hyperinflation to happen. Okay, so now what happened is after April, you can see it start to go up and it skyrocket to 6.8. The latest figure is 6.8%. It's considered very, very unhealthy. Anything that's above 6 is considered very, 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 very strong inflation figures. Okay, and if you notice, okay, some of the financial news, they already say this is almost a 30 years high. In the last 30 years, never have inflation reached 6.8%. It is causing an alarm in the last few months. Although Federal Reserve Fed Chairman, you can see he's very calm guy, that Jerome Powell, you can see the tone. Okay, Jerome Powell, I think is a very boring person. Okay, the tone is always like that. Okay, very calm guy. Okay, so you can't see an anxiety in his speech. It's a very calming influence. Okay, so, but let me tell you, behind the back, okay, my guess is during every Federal Reserve meeting, in that 2 days, okay, they'll be shouting at each other, they'll be quarreling, there'll be a lot of things, okay, there'll be a lot of anxiety, a lot of worry. Okay, Joe Biden is most likely calling this Jerome Powell every day. Okay, can you keep control of this inflation? IMF already thought about it. You need to rise interest rate fast. Okay, so it reached a 30 years high figure. It was even more than 2009, 2008. That was the subprime bubble burst. That's the peak of the bubble. That's the peak of the economy growth. Okay, in 2000 before the subprime burst, it was still lying below 6. In 2000, the internet bubble, the peak of the economic growth cycle, the internet bubble, okay, it was still lying below 4. So you can see inflation figure never hit 6.8, never hit anything above 6%. And they did it in December. Why? Seasonal factor. So it's a combination of not only the demand of raw materials, but the bottleneck of supply, if some of you already know, right? Okay, so some of the goods are manufactured but are docked in the port. They cannot unload because they said no one want to work. There is labor shortage. Okay, everybody's so happy with the helicopter money. They don't want to work because they got check coming in. Okay, their house every month. Okay, they don't want to work as worker. They can't find truck driver. They can't find this. They can't find that. Even the real estate property prices, even the real estate in US real estate today, you can't find labor to renovate, okay, the houses. Okay, it's almost just like Singapore. Okay, Singapore, we can't find people to go and do renovation. Okay, you need to wait for months. That's why there's a delay in our HDB. Okay, so it's the same problem worldwide. So it's a combination of supply lacking, supply labor shortage. Okay, supply of goods, okay, that they are docked in their cargoes are docked in the ports. Okay, and the demand is sky high because of festive season. Okay, for almost 1-2 years, US did not actually have, they have a lot of money but they cannot spend. Okay, so that's the reason why it leads to one of the highest rise of inflation figure for the second half of the year. Okay, you can see it suddenly chong up. Okay, so in some ways, okay, reflecting back, I'm right. Okay, in June we predicted it. Okay, we predicted it. Okay, then if some of you pay attention to our Facebook live video in October, okay, I did a Facebook live video again, okay, in October. Okay, sorry, I can't find the English version of our PowerPoint. So let me show you the Chinese version. Okay, so in October we did say, okay, this is a major problem over the next few months. You got to be very worried about the stock market. There might be some correction. There might be some correction in the tech stocks. Okay, and at that time I published this video. Okay, people say, Daniel, you're wrong. You're wrong because Nasdaq is still at all-time high. We are still not having a correction. November there's no correction. December maybe you drop a bit. Okay, so at the time we did say there are 5 factors, 5 problems of Federal Reserve now they are facing. Okay, that may lead to a tech stock drop. Number 1 is the bond yield, right? So everybody's discussing about bond yield today. Okay, bond yield suddenly spiked up. Okay, so at the time we did say bond yield is a problem. So some tech stocks might drop because of bond yield rise, right? That's number 1. Number 2, okay, so at the time I did say pay attention to bond yield rate. Okay, bond yield. Okay, by the way, why is it unique? Why is it when bond yield rise? Okay, why is it when bond yield rise, this chart when it rise, tech stocks has a chance of dropping, right? When bond yield rise, by the way, this was my PowerPoint in October. Okay, I said tech stock has a chance of dropping, right? Okay, it's because Wall Street thinks that some tech stocks, they are growing so fast that they are in high debt. So that means they borrow a lot of money from the banks at very low interest rate. And what if 2022 suddenly interest rate rise a lot? They can't pay their mortgage loan. Sorry, not mortgage loan. They can't pay their debt. Okay, they need to pay every month. They need to pay some money back to the bank, right? Whether is it interest, install, anything. Okay, so they need to pay their debt. Okay, but when interest rate is rising, Maybe every month they need to pay 1 million. Now they need to pay 2 million. If it rise very fast, they need to pay a lot. Okay, so there are a lot of tech stocks that is high gear. That means highly geared. That means they borrow a lot of money to expand their business. Their business are increasing very fast. They need to expand. Okay, whether is it geographical location, okay, or whether is it they need to buy over other companies, okay, or whether is it they need to build a lot of what we call employ a lot of people, okay, build a lot of plants or whatsoever. Okay, so there are a lot of tech stocks that are highly geared. Okay, and when bond, so-called when the interest rate starts to rise, they may not be able to pay their loan. Okay, they may default on their loan, or their earnings will surely drop. Okay, so that's the fear of the market. Okay, that's the fear of market today, right? Then the second thing I thought about is the tapering effect. Okay, so we all know that Federal Reserve, okay, no, September they already said that they will print less and less money, and there are two banks in July that talk about this thing, right? The first bank is called Goldman Sachs. Again, Goldman Sachs. Again, Goldman Sachs. Okay, Goldman Sachs always leak out the news first. Okay, and the second bank is Bank of America. And by the way, why Goldman Sachs leak out the news? The moment Goldman Sachs have a prediction, you must listen to them. They said 4 times rise means 4 times rise. Okay, because Goldman Sachs serve a lot of VIP clients. They serve a lot of high net worth individuals. They serve a lot of funds. Okay, so Federal Reserve need to caution all these high net worth individuals that uh, interest rate is going to rise soon. So they leak out the news to Goldman Sachs first so that Goldman Sachs can inform their high net worth individuals, right? So the first hint of tapering, okay, was in July. Then in September they announced, right? Number 3 is the debt ceiling worries, okay? Number 4 is the inflation worries. And number 5 is the rate hike worries. So this PowerPoint was done in October, okay? Following which, okay, I want you to see this is what we call the ARKK fund, which represent a lot of tech stocks, the high growth tech stocks counters, right? You can see in October what happened. This fund ETF from almost 124, it tanked. It tanked in the next 3 months to $80. Why it tanked? Because that 6 point, that 5 point that I present, whether is it the high yield problem, whether is it the tapering problem, the inflation rise problem, all kick in together. It's almost like all the bombs, okay, suddenly explode together. That's why it crashed. Okay, Cathy Wood ETF crash. Okay, Square, okay, PayPal, okay, Roblox, Coinbase, all of them dropped almost 50% one shot in 2-3 months. Okay, it crashed. Okay, now, so in some ways, I just want to show you that in some ways, I actually correctly predicted, okay, what might happen in the second half of last year. Of course, that is already over, okay? So if you haven't sell your stocks, okay, never mind, okay? Everything has crashed already, okay? You did not sell your so-called your Nvidia, it has already dropped quite a bit, right? You did not sell your so-called Mastercard, it has already dropped, okay? You did not sell Square, it has already crashed, okay? So a lot of stocks already crashed in the last quarter of last year. Okay, so Square is one of my favorite counters, okay, because it is a representation of finance technology, fintech stocks, okay. So they buy over companies like what buy now pay later, okay, such companies, okay. So the stock already dropped $260, it dropped to 140. This is a crash of almost 30% in just 3 months, right? So PayPal, okay, from September it was still lying at $300, it crashed to almost $180, a drop of how much? $120, okay, more than 30% drop in just 3 months, okay. So all these are some favorite stocks among investors, among tech investors, okay, in Wall Street. Okay. Coinbase, similarly from $360, it will drop to $220. Okay, people were still asking me, can I buy Coinbase? Because I like crypto, okay? Okay. Okay, so by the way, if you find all these things informative, all I ask for is please help me to share with your loved ones, because I'm going to share with you the next 6 months my predictions. Okay, 2022. Okay, having reflect back on 2021 is over, right? So let us do my forecast or my predictions in 2022. Okay, and by the way, in November, some still question me, Daniel, is it really true? You look at S&P 500, it's still at all-time high, right? You look at Nasdaq, it's still near to all-time high. Where is the crash? There isn't any crash. It dropped only like 5 to 10%, right? But there is no crash, okay? So I would like to tell you, there is, if you look in the, don't look at the surface. Okay, today, please don't look at Nasdaq and tell me there's no crash. Because Nasdaq consists of only 10 counters. Later, I will show you what are the 10 counters, okay? Apple did not drop. Okay, Microsoft did not. It represents 50% of Nasdaq weightage. Don't tell me the 10 stocks did not crash. All the rest all dropped, right? Some dropped 20, some dropped 30, some dropped 50, some dropped 70, okay? So this is why I call it the great tech discount, okay? So famous stock like Twitter, from $80 in the last 1 year, it has dropped to 40 today, 50% drop. And Twitter is considered the number 2 social media company in the world. Twitter, okay? Square, okay, Square. I like Square a lot because it's a representation of fintech today. Okay, Square, PayPal are all representation of fintech companies, which is a disrupting companies. That's why Cathy Wood has a lot of Square inside her portfolio. Okay, so it has already dropped 52% from the peak. C, okay, Singaporeans, we like C, right? Okay, local Singaporeans, we like C. Why? Because it's near us. Okay, okay, C is a representation of Shopee, right? So C Limited has already dropped 55%. The last 3 months, $370, it dropped to today 180, a 55% collapse in price. Alibaba, also one favorite among Asian investors, right? Alibaba from 320, it dropped to almost $110, a drop of 65% from the peak. Roku, also one favorite among people who like, so-called media company. Okay, it's almost like a media outlet. Okay, maybe second to Netflix. Okay, so Roku, $182. It dropped to $490. 3-4 months ago, it dropped to almost $180 today. 66% crash. Okay, Zoom, a representation of online meeting, and in future it may be a virtual office company. Okay, so Zoom, 588, it dropped to $180. It's one of the favorite of Cathy Wood, by the way. Okay, it dropped almost 70%. Teledoc, okay, our local minister, Singapore Minister, Media Communication Minister, Josephine, said that once 5G is implemented this year, you will see the rise, okay, of telemedicine industry. And one of the most famous representation of telemedicine industry in the whole wide world today is called Teledoc. Okay, it has dropped, crashed $300. Today you find it at $82. Okay, 74% drop. Okay, and you're talking about a bull market cycle. So to me, 2021 is the year of diversity. Okay, why I focus a lot on tech stock? Because I would say most of us like to buy tech stocks. Seldom do we buy energy counters. Seldom do we buy consumer discretionary, okay, staples. Okay, no, we like to buy tech stocks. Okay, and tech stock is the favorite. Why? Because in the COVID era in 2020, it zoomed up a lot, right? So last year, I classified stocks, tech stock, as 2 types of tech stock. Can you write down the word 2 types? Okay, make sure you remember. One is what I call the mature tech stocks. The other is the immature tech stocks. Okay. So one is mature, the other is immature. Make sure you remember that. Okay. The mature tech stocks are stocks like Apple, Microsoft, Netflix, Amazon, Nvidia. All these are the mature counters. Okay, that has been already listed for many, many years, more than 10 years, 20 years, 30 years of mature counters. Okay, and some of them do give dividend. Okay, the immature counters, forget about dividend. Your Square, your Coinbase, your Roku, your C Limited, your PayPal, your this, basically the Cathy Wood stocks. Okay, what's the difference? The difference is that the mature counter, they have cash in hand. They don't have to borrow money from banks. They don't have to expand their business. They're already too expanded already. Nothing to they have tons of cash lying in their company and don't know how to spend. That's why they are able to give dividend to you. Apple is able to give dividend. Microsoft is able to give dividend. Okay? So these are what we call the mature tech stocks. In some ways, they are more what we call they have less risk than the immature techs. Okay, so the immature tech stocks, some are IPO companies like Coinbase is an IPO company for almost like 1 year. Okay, or C Limited. Okay, or the Roku. Okay, suddenly expand the business. Okay, Square. Okay, whereby they keep on acquiring new companies. Okay, that like they acquired the one of the Australia buy now pay later company, right, for like $2 billion if I'm not wrong recently. So all these are the immature tech that are growing so fast, right? So a stock that grow too fast, okay, they will definitely have high debt. Okay, so that's what Cathy would say is called high growth tech stocks, right? They will have high debt. And I would say in the second half of the year, because of this bond yield fear or the tapering fear, people are afraid this type of stocks, they won't be able to pay the loans when interest rate rise drastically. That is the reason why they abandon this type of stocks and they turn to the mature counters. That is what happened over the last 6 months. People are dumping ARKK fund. People are shorting whatever stock is in a fund. Okay, maybe there's one or two that did not drop a lot, like Tesla. Okay, but I would say the majority of it dropped 50%. That's why the ARKK fund already dropped 50%, right? So they actually do a bit of, diversification in terms of their assets. Okay, they sell away all these immature and go and buy the mature. So let me show you Apple, Microsoft, Netflix, or what we call, sometimes we call it the FANG stocks, right? What happened to all these FANG stocks? Ever since October, it keep on running until now. Until now, $140, it run to $180. In fact, it ran from June, right? From 120, it shoot up to 180 with non-stop. Okay, Microsoft in June it was still lying at 250. By December, it went up to $350. Okay, you look at Netflix. You may think Netflix run because of Squid Game. With or without Squid Game, to me, okay, it's not important. Okay, it is among the FANG of the FANG, right? The FANG stocks from $500 it run to $700. Yes, it does fall. It does fall recently, maybe fall a bit of like 15-20% drop. Okay, but it's still considered quite a good run in the last half year of 2021, right? Nvidia, one of my favorite 5G counters. I keep on mentioning it last year, right? Nvidia, okay? Last year it was still at $200. Okay, that's second half of last year it ran to $350. They have diverse fortunes. Why? Because of funds flow. Okay, they rebalance their portfolio. They dump the immature counters. They go and short ARKK. They go and buy the Apple, they go and buy the Microsoft, the Nvidia, the Netflix, the Amazon, okay? And this is what happened. So if you look at Nasdaq 100 index, don't tell me there's no drop, because you are only focusing on the top 10 companies that have almost 50% weightage in the whole of Nasdaq 100, right? Let me show you today what are the components inside Nasdaq 100 index, okay? Apple represent 11% in terms of weightage. Today it's a $3 trillion company. It represents 10%, almost 10%. Microsoft, another 10%. Together, these two companies represent 20% of the whole of Nasdaq. Amazon, you add another 7%, already 27%. You add Meta platform, which is Facebook, another 5%, right? Which is almost 30% of the entire weightage of Nasdaq. You add a Tesla there, another almost 4.3%. You add Nvidia, another 4%. You add Alphabet, another 6%. Alphabet got two stocks called the Class A, Class C shares, right? You add Cisco, another 2%, Broadcom, another 2%. Altogether, the top 10 weightage stocks in Nasdaq 100 is already 50. This is 50% of the whole entire Nasdaq counters. And all these are stocks that did not even drop 20% in the last 6 months. Maybe Nvidia recently dropped 20% and suddenly it goes back up. Tesla recently dropped from 1,002 to 1,000 and now it's back up at above 1,000. Facebook maybe dropped 20% but now it's back up, right? But the rest of it did not drop even 20. So if you keep on looking at Nasdaq, my point to you is you wouldn't see the whole picture of the tech industry, right? Because the mid-tech, the mid-cap tech, the penny tech, okay, or the good tech, the high yield growth tech, but it's not inside the Nasdaq 100, the top 10. Maybe it's the top, okay, 90, the other 90 stocks. They already crashed, but it has no significance on the index because they have no weightage, okay? So let me tell you something, okay? These are the 5 factors that have caused the tech stocks to crash. I'm talking of the rest of the other counters, right? So the 3 reasons, the main reasons why the tech stocks crash. Number 1, it has risen too much in 2020. So in the year of COVID, after March, because COVID, everybody stay in their house, okay, lockdown, okay, people have so much time, they watch Netflix, they go and buy things, they go Shopify, they go and purchase online, they do Zoom videos, okay, online meetings, okay, do this, do that, okay, everything got to do with digital, right? So all these tech stocks already risen a lot, okay? So Zoom went up, okay, to almost a near all-time high of $600, okay? So in Chinese, we always have a saying, 物极必反, right? Anything that goes up a lot, it will come back down. Anything that crash, it will go back up again. For the next 6 months, that's the reason why I want you to pay attention to these high yield growth tech stocks, the ARKK fund, okay, the so-called the Roku, the Coinbase, the Palantir, okay. Okay, number 2, interest rate hike fear cause the high yield stocks with big debt to crash. And number 3, diversification of funds from the immature tech to the mature tech. Okay, all these are reasons for the tech crash. But tell you what, my forecast for the next 6 months will be 2022. In the first half of the year, this will be the comeback of the tech stocks. This will be the comeback of those stocks that dropped 70 to 75%. Okay, so because of number 1, inflation. So can you please write down the word inflation? I want you to keep track of inflation. It's just like, to me, last June, I keep on talking that inflation will fly through the roof, the PPI index will fly through the roof because of festive season. If you don't listen to me and you keep on buying tech stocks, and of course now you may be suffering, right? But tell you what, 2022 will be the year of inflation. Okay, 2022 will be the year of inflation. Okay, so My prediction is because inflation is seasonal. Can you please write down the word seasonal? I want you to remember by heart. Okay, inflation, this thing is seasonal. A lot of people don't know that. Okay, first half of the year, inflation normally should be kept quiet. Inflation rate over the next 6 months may not persist again. The hyperinflation figures may not persist again because festivals is over. There are no more Christmas. There are no more Thanksgiving. There are no more Chinese New Year. Okay? So the Western people no need to buy things anymore. And by the way, I guess the Westerners, okay, normally they make $1, they spend 110, right? So after spending everything, they don't have money anymore. Okay? For the first half of the year. Okay? They need to go back to work. Okay? So that's number one. They need to work. So the supply chain bottleneck will be over. Okay, they will go to port to take up the part-time jobs. Okay, they will go and renovate houses. Okay, so don't care about the supply chain bottleneck anymore. That's number one. Number two, the raw material price will be capped. Okay, will be capped. Okay, so whether is it semicon prices, okay, or whether is it the price of pork, the price of meat, the price of LV bags, I think it will be capped. Okay, it won't go up that much anymore because there's no need to manufacture so many things anymore. No need to buy so much raw material. No need to compete anymore. The so-called what we call the purchasing manager no need to order so many months away. Okay, so many months ahead anymore. Okay, so the demand of the products won't be there anymore. So this is a two what we call two factors, right? The demand is not there anymore. And I'm not talking about the West only, I'm talking about the East also, right? So our Chinese New Year in Asia countries are the most important festival. So in the Chinese New Year, there'll be a lot of offer, right? So this offer, that offer, this discount, that discount. That's why Alibaba has no what 11th of November offer, Chinese New Year offer, this and that, okay? To entice people to buy things. But the offer is over after Chinese New Year, all right? So let me share with you something. I want you to keep track of inflation figure from February onwards. Because the February, by the way, inflation figure, whether it is the CPI or PPI, right now always come out on the second week or third week of the month. Okay, second week or third week of the month in the midweek. Okay, in the midweek. Okay, so February figure will reflect January inflation. That means the prices in January, right? So in the mid of February, they will come out with the figure in January. In March, it will reflect the prices in February, right? My take is this. Once the festive season is over in December, most likely the January figures that will be reflected in February might start to taper down a bit. Taper down. That means it might start to drop a bit, okay? In March, once the Chinese New Year is over, it might drop more, okay, for the first half of the year. So my take is you need to read closely. How is the inflation figure in February and March? I'm not talking about January, okay? January inflation figure should come out soon. I think if I'm not wrong, it should be this week or next week, okay? I'm not talking about January because January still reflect the December prices. I'm talking about the next month, which is February, right? Mid of February, mid of March. My guess is inflation figure might top and starts to move down. If there's a slightest drop in inflation figure, what do you think will happen to those high yield tech stocks? Anything that crash has a chance of going back up. 物极必反, right? Anything that drop a lot can rebound. So my take is for the next 6 months, keep track of high yield tech, keep track of ARKK, keep track of your Roku, your PayPal, your Square, right? Keep track of even Alibaba, Baidu, okay? All these are tech stocks that crash. So this is what I called, okay, in finance, we call it the sell on expectation and buy on news. So last June, whereby a lot of people, the hedge fund all bet that Federal Reserve is wrong, interest rate will rise very fast this year, and they are right. So they sell before the news come out. In December, that's when the news of the interest rate rise come out. But of course, Federal Reserve is always 6 months late. They're 6 months late. They already keep on shorting all your high yield tech stocks, right? They are 6 months late. Okay, so people already sell on the expectation of the interest rate rise. But now the news is already out. Interest rate will rise 4 times. Goldman Sachs already break the news yesterday. It won't rise 5 times, 7 times, 8 times anymore. Everything already priced in. That's the effect. Can you please repeat after me? This effect is called price-in effect. A lot of people don't know how to buy stocks. They always buy on the news break. They think that interest rate rise by 3 times. From now onward, tech stock will go to zero. Right? They think that now is not the time to buy your Alibaba. They think that now you should avoid PayPal. They think that this stock will crash. Okay, 90% from now. It has already dropped 70. It can crash some more, right? Let me tell you, this is called the price-in effect. Okay, so now is the time you start to study which are the tech stocks that has crashed but with good fundamentals. Which are the tech stocks that have crashed but in the next few quarters, the CEO is still very optimistic. They give good guidance. Good guidance means they project that most likely they should be able to make more money than what the analyst thinks. Buy before it rise or start to accumulate a bit. Okay, I don't mean Square would not drop another 10 to 20. It might, but your risk is very low today, right? That's number one, inflation figure. I want you to keep track of inflation figure from now onwards. Okay, remember February and March figures. I predict from 6.8 there might be a bit of drop. Okay, any slight drop will cause people to rush to buy all this high yield tech that already crashed. Okay, so make sure you start your accumulation phase. Number two, Omicron virus is worsening, right? There's no doubt. Okay, every day it rises. Okay, today you're talking about 1 million cases a day in US. Today you are talking about doubling the figure every day, almost like, okay, every week in Australia. Today you are talking about maybe some countries will go into semi-lockdown stage again. Today is worsening in Europe. And even our own local minister predict that we might hit 15,000 cases per day in the next few months. Okay? And let me tell you something. COVID that year, 2020, causes all these tech stocks to rise crazily. And I do mean not only the mature tech stock, but the immature tech stocks. Today, Omicron may have another same effect. If this thing get worsening, and some countries go into semi-lockdown, people might buy tech stocks again. Okay? Anything that drop a lot, they find reasons to justify the buy. Number three, one of the most important and most exciting thing I want you to keep track of in the next few years is the 5G era is coming. People forget about 5G because people are zooming on interest rate rise now. Okay, talking about rate hike, talking about a tapering. Okay, talking about all those detrimental effects to tech. But let me tell you, the most important thing about tech, the most exciting thing about tech is 5G is coming. 5G will be implemented. Okay, Josephine says, okay, that we are going to implement almost 5G to the half of Singapore by the end of this year, and most likely by the end of next year, fully 5G. Okay, same with Japan, same with US, same with all the other countries. We are all implementing 5G. People have not seen the good effects of 5G yet. They forgot about it. They remembered during the COVID days, but now they forgot about it. Okay? It's time for you to refocus yourself. Ask yourself one question. The moment 5G is implemented, what are the industries that will benefit? And let me tell you, there are a lot of industries. Okay? There's virtual reality industry. There's what we call what we call smart industry. The smart car technology will arrive. The self-driving technology will arrive. Okay? Then there's the AI, artificial intelligence will be born. Okay, all these need faster speed of access. So you should, when people are shorting all these tech stocks now, you should do your homework. You should read the earnings result that's going to come out soon. Okay, I would say this quarter, the earnings result, you must pay attention to them. You must pay attention to the CEO, what they are talking about, okay, in the next 1 year. Once 5G is implemented, which are the industries that will benefit, okay? And the fourth reason, I do think this first half of the year, you might see a tech stocks comeback, is this thing called the 6 months rule. Can you please write down, this is very important, okay, these words called the 6 months rule. Can you write down in the comment box? Or please write down in the comment box, it's called the 6 months rule. Okay, 6 months rule, okay? I learned it, okay, from my sifu, okay? So I myself, okay, in the past, I also got a mentor that helped me to learn about the stock market, okay, to learn about market timing, to learn about economy, okay, how does it affect the stock market? And he always tell me, Daniel, there's always this effect called the 6 months rule effect. That means any bad news that happened for 6 months, it will be over at the end of 6 months. Any good effect, any good piece of news that come up for 6 months, it will be priced in. That's why I call the 6 months rule effect. And I've been using this rule over the last few years, and it has helped me a lot. It has helped me in 2012, 2015, when Federal Reserve said interest rate will rise. It is not the first time interest rate rise. This is not the first time interest rate has a hike. It happened every time when interest rate dropped to a low point, it rise. But this is what we call the 6 months effect. There'll be 6 months of worrying. Interest rate rise, interest rate rise, interest rate rise. But after 6 months, we accept it. Anything that fear interest rate rise will already crash. Everything will be priced in. That's what we call the 6 months effect or 6 months rule. So if last June or last August, that is the first time we talk about tapering. That's the first time we talk about interest rate high. That's the first time Federal Reserve give a hint about potential interest rate high. If you never sell away the tech stocks, now is not the time to sell. You never sell away your Alibaba, never sell away your Square, never sell the Coinbase, never put a stop loss, right? Now is not the time to sell. Okay, because if you sell now, you're like a lot of retail investors out there. They are always one step later, one step late compared to the hedge fund managers. They may already be buying, they may already be accumulating, they may already make their money by shorting these tech stocks to death. Okay, now is the time to buy back their shares, right? So that's why I call the 6 months rule effect. Okay, so if August is the time whereby all these immature stocks starts its drop, okay, so whether is it Square, okay, starts its drop almost in August, it reached a peak, right? Or whether is it PayPal, okay, PYPL, okay, in July it starts its drop, okay, it's already priced in, okay, it's already priced in. The 6 months effect already priced in, okay. So if August is the start of the fear, okay, in fact I did it in June, 2 months ahead. I warned about interest rate rise, about inflation, okay. If you pay attention to it, you avoid the 6 months collapse, right? Today you plus another 6 months, okay, August, September, October, November, December, January, February. It'll be February 2022, the 6 months effect. So that's the reason why I want you to pay attention to tech stocks, especially in February and March. There can be a revival. There might be a turnaround. There might be a bottoming forming. Maybe in the next few days, you see continuously 4 interest rate high, some predict 5, some predict 6, be it, okay? And by the way, yesterday, let me tell you, when the Goldman Sachs break the news, instead of 3 interest rate hike, they said 4 interest rate hike. What happened? What happened? I want you to keep track of what happened. This was the Nasdaq composite yesterday, right? There is a V-shaped effect. This is not a sign of worry. This is a sign of bottoming. There's a V-shaped effect. When the news break out before the trading hours, it crashed. It not crashed, but it dropped a lot, right? There was like a V-shaped effect. Suddenly after mid-noon, there's a V-shaped recovery. That's why you see a lot of tech stocks today, they have like a hammer, okay, because of the V-shaped recovery. It's a sign of recovery, by the way. This is a sign of fear already gone. What the hell? 4 means 4, so what? Okay, already dropped so cheap. Okay, maybe some predict 5, some predict 6 rate highs. Okay, be it, so what? Okay, this is an effect whereby this is almost telling me that maybe people are more resilient to rate hike news already, right? So instead of fearing, you should be looking for stocks to accumulate. By the way, if you really like our video, and I will guess, okay, it will be very beneficial, especially for those who want to really make a lot of money this year. Okay, this is once in a lifetime chance. Never have I seen, okay, a bull market whereby tech stocks drop 70%. Never, okay, never. Over the last 15 to 20 years, it never happened. Okay, so I guess there might be some comeback boiling. Okay, and by the way, today I haven't greet you. Okay, I don't give you my Chinese New Year greetings. Okay, happy Chinese New Year, by the way, and happy New Year, happy Christmas. Okay, sorry that in December we did not have a chance to meet up with you to update you on my predictions over the next half a year, but I guess now is the time. Okay, now it's just nice because we are talking about earnings season coming out soon. It's time to do your homework. It's time to read out on, okay, some of the Cathy Wood stocks. What are the stocks that have good fundamentals? Okay, and by the way, today I'm going to give you something, okay? So if you really like, okay, to have some good luck this year, what I did is our company, we really go and buy some gold coin from the gold shop this year. Okay, we are going to give you some good luck by giving you a good ang pao. Okay, so if you want this gold coin free, by the way, free, all you need to do, if you want it free, okay, can you give me a thumbs up or love sign? Okay, I'm going to give it to you to 3 participants today. Okay, 3 participants today. If you want this good luck ang pao, okay, we wish you the very, very best in the stock market and hopefully give you some good luck. Okay, so as a token of appreciation for your attendance, okay, so all you need to do, thank you for your good sign, thank you for your love. Okay, all you need to do is do the following 4 steps. Okay, the following 4 steps. Please like our page. Go to Facebook, whether you are in YouTube or Facebook, just go and like our official page and make sure not at the other pages but our page, okay? Under Daniel Low Investment Group with now around 26,000 followers, okay? All you need to do is like our, if you really like us, good, okay? Proceed to step 2, share this video today. Can you share this video? Share this video to your loved ones. Okay, share this video so that we can see it in your Facebook homepage. Okay, only when you share, then we are able to know you shared. Okay, number 3, after you share, tag as many friends as possible. Okay, tag as many friends as possible. Okay, and number 4, step 4 is comment shared in this post today. Okay, so the 3 most shared person will receive this free gold coin. Okay, 999 pure gold coin. Okay, free gold coin. Okay, hopefully it serves as a good luck charm from us. Okay, so the winner will be announced on 21st of January in our Facebook page or official page. Okay, no matter where you are, any parts of the world, we can actually send this gold coin to you. Okay, to your house. Okay, so we'll interact with you, but make sure you put it in your Facebook homepage. That's when we can actually message you. Okay, So without sharing and putting your homepage, we can't. Okay, we need to know your address. Okay, so like our page, number one. Number two, share this video out to as many friends as possible. Sorry, share this video in your homepage. And number three, tag as many friends as possible who you think might benefit from this video. And number four, comment shared in the post. Okay, so the three most shared person will receive this gold coin free. Okay, thank you for your attendance. Thank you. Okay, and one last thing. Okay, sorry, today we don't have much time. I guess it's already 1 hour. Okay, so the most important thing from now onwards is to do our due diligence. Okay, whatever already fallen, and if some of you did not actually sell away, be it. Okay, so be it. It's time not to sell anymore. Don't need to fear about interest rate hike anymore because everything is priced in, and now people are looking about some positiveness in the stock market in relation to the high yield tech stocks crash. So any good piece of news like a bit of inflation figure drop will help to stimulate, okay, the boom. Okay, and furthermore, there are a lot of good piece of news like 5G infrastructure. Okay, most likely everybody will implement their 5G. Okay, so you will see all these stocks that are related to 5G. There might be a chance of booming, most likely, okay, after February or March, okay, this year. So if you really want to know what are the stocks that I am looking at, in fact, I've done my due diligence last month, okay, during our holidays. Okay, I have some time. In fact, I'm being, okay, lazy at home. Okay, sometimes just see my Netflix. Okay, my Netflix drama series. Okay, I like Netflix a lot, by the way. Okay, and I've been doing some research. Okay, so if you want to know what are the tech stocks that I am looking at that would definitely benefit from this 5G era or this year, that's having very good growth potential. I call it a good growth potential, and most likely are in not that much debt. Okay, are in the in recovery phase. Do come to our physical seminar. Okay, in this physical seminar, I will share with you the top tech stocks to watch out for this year. Okay, so I'm going to share with you what are the tech stocks to look out for after this crash. Number two, the great 5G tech boom. What are the industries that will suddenly come up? Okay, so whether is it AI, artificial intelligence, or whether is it fintech companies? Okay, what are the things that, what are the so-called the booming effect of 5G? Okay, and number three, how to build your retirement portfolio. I guess there's no better time than now to watch out for stocks that will drop 70%. Okay, 60%. Three important traits of a successful investor. And by the way, another hint for you. Why I'm very optimistic for second half of this year. I need to tell you one reason. Because of midterm election in US in November. I predict that second half of this year, there might be more stimulus measures. Joe Biden wants to print $3 trillion today. So if there is any correction, any form of correction any form of correction from 10 to 20% will cause this stimulus to be implemented. The Congress will pass the stimulus measures. They want to win the midterm election so that they can defeat Donald Trump 2 years later. Okay, so most likely the Democrat Party will go full out. Once this inflation rate starts to go down, they'll go full out. Joe Biden will go full out in trying to implement more money, okay, in trying to stimulate the economy, okay, implement the $3 trillion stimulus package. They are still in discussion today, by the way, okay. So don't worry about a big crash. It won't happen this year. There might be some correction, yes, but it's an opportunity for us to buy, okay. And I'm going to share with you how to use the options to make 5 to 10 times more return. So I've been a derivative traders. If someone want to learn a bit about options, come to this physical class, okay? And this physical class is free. But seats are really, really limited, okay? We can't accommodate more than 50 of you in one class. So there's English session and Chinese session. I really sincerely hope that you have a good time, and I sincerely hope that 2022 won't be as bad as 2021. So I sincerely hope that there will be an economic recovery. There will be really, okay, an era whereby we don't have to talk about COVID anymore, and you are talking about a full-blown economic growth. So as well as 5G. Okay. So thank you so much. Okay. Today, sorry that I can't converse with you so much. Okay, in Facebook or YouTube. Thank you for your attention. Do share this video to your loved ones if you want to come and find out what are the tech stocks in my portfolio I'm going to buy, and you want to look out for it. You put in your watch list. Come to our physical seminar. Okay, just click on the link. I think the link is shown. Okay, in the comment box, www.dl-investment.com/en, right? Or you can want to come for Chinese, it'll be www.dl-investment.com/cn. Okay, so thank you so much, and I really hope you have a very good Chinese New Year, and see you again in the next video. Thank you. Bye bye.